When you retire, you might wonder what to do with all those life insurance policies that you've collected along the way. Today, you'll learn the top 5 things to do with your life insurance and whether you even still need it in retirement. The first thing you might do with your life insurance is keep the life insurance. Life insurance is not about replacing a salary, it's about replacing an income. And just because you're retired and not getting a salary doesn't mean that there's income that you could lose. When you're in retirement, you might have a pension that drops in half, maybe even goes away. That's lost income. If there's 2 of you, there's definitely less Social Security when the first person passes on. So you should figure out if that loss of Social Security, perhaps the loss of the pension, there's even higher taxes that happens when you go from 2 people down to 1. That could create too much of a problem that cannot be met by your investments. If so, you might want to keep your life insurance, or maybe even consider a term insurance that covers you for at least that first half of retirement. Because passing away too early in that first half of retirement is a much bigger deal financially compared to passing away in the second half of retirement. The second thing you might want to do with your life insurance is to use it for your estate planning. And estate planning along the lines of life insurance is a tax-free payout. And you've got a lot of options. Now, your traditional IRA, it has to be paid out over 10 years when your kids and beneficiaries inherit it. And there's specific requirements about these required minimum distributions each year and taxation. For life insurance, that's a tax-free payout. So you might hear or might even consider the idea of looking at your life insurance as a way for the kids to inherit money as opposed to your traditional IRA to inherit your kids' money. The third thing you can do with your life insurance policy in retirement is to keep it as an emergency fund. And you might have a big life insurance policy. You might have one that builds up cash value. It's called over time. And you might be tired of paying that bill. And instead of just canceling the policy, quite often you could do something called a reduced paid up option, where you bring your death benefit down to basically the exact minimum that it could, and it leaves the cash value in there. And quite often that cash value growth, what you're getting on the money that's inside that life insurance policy, is competitive, if not even better, than what you might be getting in the banks. So you could use your life insurance policy not for so much the big death benefit that maybe you needed earlier, but maybe just to hold on to the cash that's there. Perhaps you reduce that death benefit to as low as you can so that your charges are as low as they can be, which allows your cash to grow as quick as it could be. And that money oftentimes could be available to you tax-free. That principal you put into it, known as a cost basis, it might be available to take out tax-free in case you need that for an emergency. So that's a place you could look for your life insurance, what to do with it. The fourth thing you can do with your life insurance policy when you hit retirement is you could actually sell your policy. If you don't need it anymore, quite often, instead of going to the insurance company, canceling it, and just grabbing whatever cash out of it that's left, you could sell that policy to a third party. That's called a life settlement. And oftentimes the amount that the life settlement company, the investors who are buying that, is willing to pay is more than what's known as a cash surrender value of your life insurance policy. So before you cancel your policy, you might want to look into selling it through what's something called a life settlement. The fifth thing you might do with your life insurance policy is what you might have thought to begin with, which is just cancel it. Take a look at your investments. Take a look at how much you'll be getting from Social Security and pensions, and consider, do you even need this life insurance policy anymore? If you don't need the insurance policy anymore, you could certainly feel free to cancel it. Quite often then there might be money that comes back to you. Keep an eye though on what that amount might be and whether it is higher than what you've paid in. Anything you've paid into your life insurance policy comes out to you tax-free. Any extra interest that you've probably not paid any taxes on over time, that would come out to you as a taxable event. So you might just keep your life insurance in retirement. You might just use that instead, not so much to protect you and your spouse, but perhaps as a way to get tax-free money to the kids. You could use your life insurance policy as an emergency fund. You could sell your policy, and you could also cancel your policy when you hit retirement. Hi, I'm Jeremy Keil, owner of Keil Financial Partners. And if you're interested in seeing how we help our clients get more income, pay less in taxes, and avoid big retirement mistakes, make sure to go to keilfp.com. That's ilfp.com.